Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, December the 2nd. I'm Eric Wilkinson, and you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environments, and how that comes in to impact the markets with some of my market analysis. I'm going to do the same thing for you folks out there in these daily market commentaries, but wait, I'm going to go a little bit further and talk about my option strategies that I'm implementing in my portfolio based on the assumptions I come up with through my market analysis. For you folks, we have streamlined the process for you guys to understand what option strategy is best suited for any directional assumption. And I'm not just talking about a bullish assumption and you're buying a call. No, that's not always the best situation in order to implement a strategy. What we do is we look into the details of stocks, bonds, and everything else and find the right strategy for the underlying that we're looking at. All right, so follow along at protraderstrategies.com on those webinars because I go through a step-by-step process that you can easily follow and easily understand. I try to make it so that you guys will understand this stuff intuitively. So please check those out. All right, let's get on with the economic data. See how that's impacting the overall markets with some market analysis. Not really a whole lot of geopolitical stuff going on other than maybe OPEC maybe have gotten a little bit closer on these talks through OPEC. They're probably going to come up with some production cuts. We'll have to see there. All right, so economic data across the pond. Germany retail sales coming in nicely at 2.6%, expected to be 1.3%, and a slight revision to last month's number higher there. Did you guys want to see any unemployment numbers from across the pond, Spanish and Italy? Yeah, no. It's not really that great. All right, nothing to see there really. All right, so here in the United States, we got our unemployment numbers. We got some ADP, non-farm employment change. Now, this is always just ahead of the real number, which we get on Fridays, first Friday of every month, and that's the unemployment number or non-farm payroll unemployment number that we used to talk about on the floor. That's really the major economic data point we're going to be looking for this month on unemployment. That comes out Friday, like I said. But just to give you a little taste of what's going on here, ADP non-farm employment change came in at 307,000 hires, expected to be 433,000 hires, and a revision to last month's number up quite nicely from 365 to 404. So that is good and not quite enough to make up for the headline miss though, but still nice to see that big revision to the backside there. Headline number not looking so great. Also today we have several FOMC members talking, trying to get their last word in before they basically have to zip the lips and not talk about Fed policy. They can talk, but they just can't talk about their outlook on Fed policy a couple of weeks ahead of the FOMC. How do I know that's happening? Because we have the beige book later on this afternoon. Something really to keep an eye on. It really gets overlooked by mainstream finance. A lot of people don't really look at that number, but I say get your eyes on it. Why? Or listen to what's coming out of the beige book, because during the FOMC meeting, it's a 2-day meeting, generally speaking. They get something that's called the Blue Book, and that is an updated version of the Beige Book. So there's not going to be a whole lot of changes in the Blue Book versus the Beige Book, so why not take a look at it just to see what they're going to be putting their eyes on ahead of time. Also, like I said, several Fed governors speaking, getting their last words in. We got Quarles. Now, Powell's testifying, but we also have Williams speaking as well. So a couple of those guys to keep your eyes out on. Maybe watch the Powell testifying and keep your eyes out for that beige book, all right? So that's it for the economic data. Let's talk about the overall markets. We've got the crude oil inventories. Oh, did I talk about crude oil inventories? They were off. Where was that? Crude oil inventories. Let me see. I know I forgot it. Crude oil inventories down 700,000, drawdown of 700,000. Expected to be a drawdown of 1.7 million. So missing by a million, which is, a build is what that is signaling. We did not draw down as much as what was expected. Now, something to keep an eye on here is we've talked about this. When we see times of a glut of oil coming in, lack of demand. A lot of times we'll see these inventories of crude oil, because that's really the headline number we all look at. We see those inventories move down, and that sparks the idea, hey, we have demand here. We're moving we're using oil, so we have demand there. Well, one of the things we have to look is behind the curtain there and see what's really happening. And it looks like production is increasing. And since they're increasing production, that means they are breaking that oil down into different parts, whether it's airplane fuel, which they're probably not doing a whole lot of, but gasoline, distillates goes into manufacturing process. We saw big builds in those, just over 3 million for the gasoline, 3.5 million gallon build in gasoline, and what was it? The distillates was about just 3.25 million barrels build there. So looks like they're taking one bucket, shaking it up, fixing it, dumping it out into other buckets. And then those buckets aren't really being counted very much. We're really looking at the main bucket of crude oil, right? Well, that has got to lead you to believe that they're just kind of moving that out of the way, giving it a little bit of support. Still haven't heard anything from OPEC, which we probably should sometime today, I'm guessing. But today, we're getting that crude oil, a dollar move up into the 45 handle, back above that 61 Fibonacci, which is what I was hoping we were away from. We were going to roll back down to $40, but I think that the market's trying to get support here based on a big production cut out of OPEC going forward here. So that's why we're seeing some strength there in crude oil, despite the fact that we're seeing big builds across the board. Gold futures moving higher by $11 on the day. Yesterday was a screamer to the upside. Got back above the 200-day simple moving average, which lines up, as where my cursor is, basically. But let me get out a pin. I've not been playing around with the pin very often, so let's get that thing back out here and fire it up. 200-day simple moving average is pretty key for when we are talking about support and resistance, especially when we have something like this. Now, I do have Fibonacci extensions up here. The 123 is up a little bit higher here. All right, but we've gotten above that area. Now looks like we've gotten above the 9-day. If we stay above the 9-day, that's starting to signal a bit of a rotation out of this bearish move, short-term bearishness, and getting into short-term bullishness. Now we get above that 50-day simple moving average, all of those things start becoming more and more bullish, all right, for longer durations there. But right now, back above the 9-day simple moving average, giving us a little bit of a short-term bullish outlook. We might very well go up and test those value area highs up there in and around 1900 a troy ounce. So I'm kind of expecting this to happen, especially with what we're seeing with Fed policy talking about getting an early stimulus out here before the year end for some of those people that are really struggling right now, and small businesses, which is just being devastated right now. So hopefully we can get some of that going as well, get this economy firing back up, despite the fact that we are very near to another lockdown here in the United States anyway. All right, bonds off 18 ticks on the day, supported by that 172 handle. That's going to be a psychological level where I think that the market is going to want to defend. It's very close to the point of control. I expect interest rates to start coming off a little bit, which is that teeter-totter effect that we talk about so much when you have interest rates versus the bond pricing here. And it's like a teeter-totter, right? So as bonds pricing goes down, right? So if we have bond pricing go down, let's just call that pricing, then we have interest rates going up, all right? So that's what we're kind of looking at right now with this type of situation. I want to see interest rates suppressed for a little bit longer, you guys. I don't want to see higher interest rates, because that encourages the retailer or the person like you and I to start saving. And right now, at this point in time in our economy, we need some spending going on, especially heading into the holiday season. Don't like to see those interest rates rising right now. All right, so VIX is coming off, but albeit we'll just call it unchanged on the day because we've got a bit of a mixed bag at any given time during the day here of the equities. Right now, Dow Jones is in negative territory, but it's only by 4 ticks. We are really holding on to 29,600. Okay, that's where my old Fibonacci line is set up for right here. So I set that up for the Fibonacci, have some extensions a little bit higher here. But for the most part, I want to keep that in there because that is truly acted as a support and resistance. And it does line up with the value area high here in my market profile right there. The value, we'll call that the value area high, right? So staying above that, building up some time and volume, that's acted as support now for the markets in at least the Dow Jones Industrial Average right now on the futures. All right, NASDAQ having a little bit of trouble pushing up against its Fibonacci 100 here, where I lined it up against right before we started getting that little bit of a sell-off when we started seeing some resurgence of the coronavirus, but starting to peel back up there. We did create an all-time high here in the NASDAQ, but that is still an area where we're lining up against that old trend channel. And I talked about this is more of a healthy type of incline as opposed to the type of incline we saw coming out of the coronavirus. So I'd like to see a bit more of the bouncy, bouncing ball, if you will, creating higher highs and higher lows, which is what we're trying to do right now. Maybe a little bit of a correction, but just continue to kind of roll back and forth here in the markets and just kind of do one of those kind of deals, all right? Very similar to that anyway. And then moving over to the E-mini S&Ps, we talked about it during the day session. We did get an all-time high, so that is a solid print we can keep our eye on. Today, pretty much unchanged. Again, everybody probably shoring up some positions ahead of the unemployment number on Friday. So we do get some more PMI numbers out of France and European region, and we also get our services. So tomorrow is a big day for the PMI, Purchasing Managers Index, service side. We've already seen the manufacturing side earlier this week. Now we'll start getting the service sector. And the United States is more of a service sector than a manufacturing sector. So we'll be probably keeping a more close eye on that one here in the United States. Let's break down the E-mini S&Ps, checking out a 30-minute candle chart of E-mini S&Ps. Got that rally, printed a newer high since we talked on the daily market commentary that was coming in late in the day. Got a bit of a sell-off here heading into the close of yesterday. That was probably more profit-taking than anything else. Mixed bag overnight, nothing really to see here, but we have seen a lot of strength coming into the day. All right, so let's talk about a couple of trades that I've done. I meant to talk about this, and we did this on Friday. Sorry, I've got a dog trying to talk to me in the background and trying to steal the limelight here. But anyway, work, Slack, technology. You guys remember I put on a long strangle or a long straddle on this quite a ways back, and I did this for the webinar that we're doing right now on the roadmap to trading options, and I did this on 9/25 for Slack technology. So 9/25, quite a ways back here on a long strangle, 9/25 right there. We've got. So as you can see what's happened here on 9/25 right in here. I can't remember exactly where I saw that. It was basically in here. And I went in and did the December. So we did the December 28 straddle. All right. So basically what that means is, what is a straddle? I go in and I buy a call and a put at the same strike. So that's the same strike. So we've got a call and a put that we bought. And I bought that straddle for, what did I buy that straddle for? $6.57. Now, it was not working out throughout here. As you can see, I did get a couple of boosts there, but when you're paying $6.57, my break even on that is above or below that strike of 28 by the price that I paid of a debit, right? So basically, we're looking at a break even of 34.57. Well, I didn't quite get there. You know, the 34.57 is very close to the value area high, so I didn't quite get there. That was more of a break even, and rode it out. Market sold back off again to the downside, still not near my break evens on the downside to start, you know, because it's a long one. I need a long straddle. I need a major breakout. Well, it wasn't working out, so I decided to go into the earnings with that strategy, all right? And, you know, I talk about this a lot. You know, you get a buildup in volatility heading into those earnings events. You usually want to cover those, okay? And 99% of the time, I will do that, unless it's basically looking at a full, you know, I'm staring down the barrel of a full loser, which is what this was doing. And I didn't really get a major volatility expansion like I would have liked to see. As a matter of fact, you can see I did get some volatility contraction, but it closely tracked where I got in. So I never got that expansion volatility heading into the earnings. Yes, volatility crush definitely hurt this strategy afterwards when I got that move down to the downside. But you can see a massive outpace to the upside with them coming out expecting to lose money on the quarter, and because of Corona, they knocked it out of the park and got themselves into positive territory on their earnings for earnings per share. That's pretty huge, and the market reflected that by spiking higher, you know, by almost 30% after that earnings. Couple follow-through days, and yesterday, or actually today, decided to cover that because we're consolidating a little bit. I am worried about this bit of a gap that we've got right in there, and just decided, you know what, I've squeezed this out about as long as I can and covered it for a very nice profit. So I covered that DEES 28 straddle for $15.30. Usually I'm looking for maybe 50% increase, or a double is kind of like a home run with one of these. Well, this was a grand slam on that because I covered it for $15.38. That was a nice trade there for work. And I think that might be one of the first times I've ever traded work. So good to go out on a nice high note there on that one for a first time try. It reminds me of when there were new traders in the pit. Nobody ever, if you were a new trader on the floor, your very first trade was always a winner. The pit made sure of that, it seemed like. All right, Kroger. Same situation we've got over there in work. Like, what do we do with this? Right now, I had an opportunity right off the bat with this trade. When I first put it on, a couple of days into it, I probably could have gotten out of it. I was squeezing it for a couple of extra pennies to try and get out for a 50% increase in this trade. And what was it? The 9.15, so quite a ways ago, right there on those bottoms. So right here is where I put that trade on. And I did the Kroger, went into the, the January, bought the 35 calls in there. So I did the Jan 35 calls, bought those for $1.50 something, I believe, Kroger for $1.53. All right, so $1.53 is where I bought it. Remember, we got to talk about the option multiple. I bought it for $1.53, but every one option contract is worth 100 of the underlying. So really, when I bought this Kroger, I did the Kroger January 35 calls for $1.53 times 100. So I actually had to pay $1.53. So if I ever, miss out, that's kind of one of those things. For 30 years I've been trading. It's just one of those assumptions. My brain processes it the same as I just know that's. I got to move the decimal a couple places to the right, okay? So with that trade being said, it's only trading around 50 cents right now. I'm going to roll the dice on this trade and, you know, win, lose, or draw, play this to the upside on the earnings tonight, just like I did with that work. It's been a long time coming. Right here is about where I probably should have covered that trade. But, you know, did I want the penny or did I want the trade? I was still bullish, thinking it was going to go up, test the highs. I think that a lot of people are still going to the grocery store more than they're going to the restaurants, right? And with another round of lockdowns, they should be doing very well as far as I'm concerned. So I'm going to hold on to this trade. Still bullish on it. I'm willing to roll the dice on the last 50 cents left in this trade. And remember, I've got this in my IRA and I've got this also in my trading account. So I'm going to let both of those ride through this earnings call. All right. So I just wanted to talk about that because those are two trades that weren't working out. So when we put on a trade, you know, usually I like to get long options, buying options, calls, or puts ahead of earnings, and like right there where we'll get that expansion and volatility for the earnings, and then they will usually help out the trade. If it hasn't, and I'm already looking at a loss on that trade, I'll just ride it out, roll the dice on it for the upside, because the volatility at that point is not really going to hurt me any more than the directional or the theta decay that I've already seen in this type of trade. So now Tesla, I do have a working order in here, and I missed this trade earlier this morning. I got in right after I saw that this trade happen. And if you guys remember, in the Tesla trade, I had sold just a couple of days ago, the 30th, I sold the, the December 720 calls in there for $11.95. Now, if you guys remember, that was the day that it really started spiking on me on these, the D's. Sold the D 720 calls for $11.95 there. You know, times 100, so I had to pay out $1,195 to put on this trade, okay? So $11.95. I'm trying to get out right now with a $6.85. I'm trying to buy it back for $6.85. So it's gotten away from me. As a matter of fact, we're near the highs right now. When we were near those lows, I was very close to it. And then the market just started ripping higher here. And it's gotten a little bit away from me at this point in time. I don't love the way that this candle is setting up right there. That's making it look like we're finding a bit of a bottom here and might start retracing to the upside. Now, keep in mind with this trade, I only have about 16 days left. So the theta component, the thief in the night, is really becoming aggressive here in the Tesla trade that we have on. And as a matter of fact, it's probably close to like $1 a day, I'm guessing. No, it's not quite $1 a day. It's about 81 cents a day, so close to $1. So that's going to really start helping me out. The closer and closer we get to expiration, it's going to start really ramping up here. So got a decision to make here. Looked like it was going to happen. Not so much anymore with this market moving against me at this point in time. And that's about it, you guys. Those are the only things I've done so far today. I am working on some new webinars. You can see I'm getting my screenshots all set up. But please take a moment to go over this disclaimer, as we're an educational company. I'm not trying to get you guys to do these trades that I'm doing. What I'm trying to do with these trades that I'm doing is show you an example as to how we work these option strategies into our portfolio based on the guidelines I mentioned at the beginning of this webinar. So please take a moment to go over to Pro Trader Strategies, sign up for a couple of those videos. If you like it, let me know, and give me a comment, because I'll respond to everybody. If you can't take that, take it easy.